Hello, you lovely people. Welcome to our next chapter. It's about accruals and prepayments, one of the most important chapters for your accounting, also for your level 3 AT advanced bookkeeping. This is a major chapter. Questions comes a lot, adjustment comes, double entry comes, journal, and then ledger, also the treatment in statement of financial position and statement of profit and loss, SPL and SOFP. Comes a lot. Well, we're going to cover in this particular chapter accruals. What do you mean by accruals? Accruals means due, unpaid, accrued, not yet paid. Yeah, it could be your expenses, like expenses are due, unpaid, it's accrued, it's not yet paid, or yet to be paid. Whatever you say is the same thing. Accrued is simply due. It could be your income, which is due, which you didn't get. Or if it's an expense, which you didn't pay. So, if it is an accruals of expense, what do you think? Expense are accrued, due. You have to pay. We have to pay. So, it's a what? Yes, liability. It's our liability. Accruals of expenses, a liability that goes into SOFP, statement of financial position. And accruals of expenses you didn't pay, but you will have to pay. That's why in SPL we add. What do we add? Accruals of expenses. Yeah, do you remember that one? And then prepayment of expense. Let's talk about this one first. Then I'm going to cover the income later. I'm going to thoroughly cover. I'm just giving you a little gist in this particular first video. Prepayment means already paid. You already paid for the services, but you didn't get the services yet. Or the goods could be. Yeah, already paid or just paid. Paid in advance, we call it. Money gone out already, but we didn't get the services. We're going to get the services or products, which is a good thing, which is an asset. It's a current asset basically, yeah? And accruals of expense is a current liability, not just liability, current, short term. Prepayment of expense is current asset in SOFP. And in SPL, remember, we deduct. Because it's already paid, that's why we deduct. Okay, that's the treatment in SOFP and SPL. And the same treatment we do opposite here in terms of income. Accruals of income, prepayments of income, we do opposite. Opposite of whatever we've learned at the top. Don't worry, we're going to go thoroughly in detail. This is just a gist, a starter. Let's start the chapter. In this particular chapter, we're going to cover accruals concept, accruals of expense, prepayment of expense, accruals of income, prepayment of income. Now, yeah, these are the 4 things we're going to cover. Let me write down a very nice, interesting mnemonic here. P-A-P-A A-L-L-A, Papa Allah. And I just halved it in between. And this mnemonic might help you at the end of this chapter or somewhere in the middle, well, when we'll be doing a reversal of accrued or prepayment, your entry. Yeah, Papa Allah is a mnemonic. Yeah, so stay tuned throughout the chapter. We're going to have quite a few videos. Long videos are going to be. Okay, what is your accruals concept, people? Accruals concept just generally is a concept. It says whether you received or paid the money. Means if it is an expense, whether you have paid or not, that's not a matter. It is incurred, you need to record it. That's your accruals concept. Yep, it's incurred, you need to record it. That's your accruals concept, which is also known as matching concept. It's not on a cash basis. Yeah, your SPL is based on accruals concept, SPL. And if there is any year-ending accrued or prepaid, we take into SOFP, state financial position. Well, people, then what is the cash basis? You know the cash flow. Not in level 3, it is in level 4 cash flow statement. Well, you have done the cash book. Cash book or cash flow is based on a cash basis. But accruals means here they're going to say whether you have received or not. Where it is here. Whether money paid or not. No matter, as soon as it has incurred or you have earned. Incurred means it's an expense. Any expenses has incurred, like you received the invoice, you're not going to pay now, maybe later, but still you need to show that in expense within the accounting period. Yeah, accounting period is 12 months. And you need to show it. You might not have paid the expense, but you need to show that expense into that accounting period. So does with earned. Earned means income. If you have received any income, you have earned, not received yet. It's a accruals concept. Both, it covers both accrued and prepaid. Both. It's not just accruals, both accrued and prepaid. Yep. So yeah, that is your accruals concept. Let's check out one quick illustration, which is illustration number 1, accrued expense. Before that, if you would like to know, like, let's assume rent payable is £100 per month, doesn't it? So for 1 year, how much it should be? It should be 1,200, shouldn't it? But we paid, let's assume 11 or £1,000. We paid £1,000. So how much is due? How much is accrued? Due is 200, doesn't it? 2 months rent is due. But while doing SPL, how much you should show as an expense? You have paid, although you have paid 1,000, shall you show 1,000? Answer is no, you shouldn't. As a rent expense, you need to show 1,200. That's your accruals concept. The 200 is still due, but you need to show it because it has incurred within that accounting period. Yeah, within the 12 months time. That's the little concept of your accruals concept. But throughout the chapter, we will be dealing quite a lot with this particular concept of accruals and prepayments. Okay, let's do the illustration number 1. Okay, going back there one more time here. This 200 due goes to SOFP as a current liability because that's your due. All right, now going back to the illustration number 1. Fred prepares his accounts to 31st December each year. 31st December. People, year end is very important. If it is 31st December, so 1st of January is the year start. And from 1st of January till 31st December, it makes how many months? 12 months. That's your one accounting period. Yep, that's correct. Okay, on 1st of January 2018, he pays a telephone bill of 60, which relates to the period of October till December. So October, November, December 2017. See, the bill relates to 17, but he paid in 18. So it's last year's bill. So although the payment does not go through the cash book until 2018, yeah, the payment was made in 2018. So money going down in 2018. These expenses incurred when? It incurred in 2017. That's why it must be included in the accounts for the year ended 2017, not the 18. Yes, you paid in 18, but these expenses incurred in 2017. That's why you need to abide by the accruals concept rules, and you need to show that expense during 2017 expense. Okay. All right. Let's keep going. More. Accounting entry for accruals concept or expenses. Let's keep reading all of it. Accrued expenses, expense incurred by the business during the accounting period, not yet invoiced or paid. Yeah, we have said it, and it's expense in arrear. Yeah, quite a few names it has. Adjustments for accruals and prepayments tend to occur at the end of the year. This is called closing. Remember, because later on we'll be learning opening, closing, accrued or prepayment, and are made by the journal entry. Accrued expense have dual effect. Yes, it does have a dual effect. One into the SPL. And what do we do with the SPL? We add it. Accrued, we add it. Just remember, or to write it down. Accrued, whether income or expense, no matter, we add. And if it's an accrual, so increasing the expenses, account in the statement of profit and loss. Into the SPL, we add accrued. You know, in our example of rent, what we did, rent 1,000. Plus 200, yeah, equals to 1,200. We have showed it as a rent expense into the SPL. But in SOFP is a current liability because we haven't paid yet. We need to pay how much? 200, not the 1,200, not the 1,000, because 200 is due. That's your current liability. Just keep going bottom. So there's a formula to learn. Basically, it's a journal entry, double entry you need to learn. Expense is going up because you're adding with the expense. That's why SPL debit, and SOFP is a current liability, SOFP credit. That's the journal you need to learn, and that's how you need to post into the general ledger. If you went to open T accounts, for SPL account, it's a debit, and for SOFP account, it's on the credit side. We write the opposite account name. Sometimes there is a narrative needed, means you need to explain what is happening here. That is the meaning of narrative. And what is happening here? This is happening here. Being an adjustment to accrue the value, this x is the value expense for the year ended 2000 whatsoever. Yeah, means as an expense accrued. That's what you need to write or choose in your assessment. Okay. Even if it is said in the assessment, some tasks may require a narrative explanation for the journal. So that's the simple narrative. What is happening, you need to explain. Is it accrued? Yeah, write down accrued being happened. It is prepaid? Write down prepaid. Is it expense or income? Write it down or choose it. Yeah. Statement of financial position presentation. In the statement of financial position, yet again, it's a current liability. Well, there are some calculate the expense for the year, calculate the accrued expense for the year. Quick steps given. Let's quickly go over this approaches. If you get a task, how do you approach it? Read the requirement for the task carefully. That's the first thing we do. What you are being asked to do. What are you meant to do? There could be quite a few questions from accruals and prepayments, like you're meant to do a journal, could be a ledger, could be a statement of financial position, could be statement of profit and loss. Yeah, bank account could be. What happens basically when you pay, your bank goes down. When it is due, it's a liability being created, and the journal entries you do accordingly. Let's read that. Calculate the expense for the year. First one, review all the invoices listed in the question and identify which invoices relate to the current year. You need to find out the current year invoices. Yeah, and that is the accruals concept. Those invoices does not relate to this year. It goes to the next year. Yeah, and that's what you don't count within the current accounting period. Remember, if the invoices relates to current year, include the full amount. Yes, we got to do it. If an invoice has been received after the year end, check whether some or all of it relates to the current year and add the portion. You know, some of the portion, some of the month. Let's say your year end is 31st December, and you got an invoice from November till January. So November and December falls into this year, but January is next year. So that's how you need to do the proportionate. Well, we'll do the hands-on examples. It'll make more sense. Calculate the accrued expense for the year end. Review the task, invoices received, and check whether some or all the invoices related to current year. If there is any portion, the same like this one. Yeah. Let's read the record of the accounting entries. The first one, we are covering every bit of this, basically the BPP book. Yeah, it's a vast coverage. Record invoices paid in the year. You will be paying some of it. In our example, we paid 1,000 rent, doesn't it? How do you record it? Your bank is going down. That's why bank credit. and your expenses are going up. That's why expense debit. Yeah, rent debit and bank credit by 1,000. That in our example, we have started with this example. Yeah. Then second one, record the accrued expense. How much was accrued? 200 was accrued in our example, wasn't it? Was due. And it's a current liability. So accrued would be credit. Liability, credit, SOFP. So SOFP credit, and expenses are debit, SPL debit. Yeah. And then you do the balance of the bank account and the accrued expense accounts. You do balance CDBT. Yeah. Balance of the expense account by showing the transfer to the profit loss account. Expense, we transfer it to the SPL. Accrued and bank, we do balance CDBT. There is a quick activity, activity number 1, where you're going to do quite a few things. Number 1, A, electricity expense for the year. B, accrued. And C, there is a electricity expense SPL. T account, it's a T account, and bank account SOFP, balance CDBT you got to do, accrued expense is a current liability account, yeah, SOFP as well, bank is a debit account, yes, electricity is SPL, it should be a transfer. It's a big one, it's a long one, and there is a pick list given, when you choose and pick and put the correct figure into the boxes. Let's read the question carefully. Fiona set up a business on 1st of January 2017. Her cash payments for the year to 31st December 2017 include, so 1st of January till 2017 till 31st December 2017. So January till December is the year end. They paid electricity on March. They paid it 96. Fiona paid it. 2 months to February, so January, February paid. And likewise, it is paid until November, May, August, November. Quarterly, it is being paid. Yeah, so all falls within the current accounting period, isn't it? Because it's from January until November. Until December is our current accounting period, but all falls within this accounting period. So all of it we've got to take into account as our expense because that has incurred. On 6th March next year, this is next accounting period, received an electricity bill of 168 for the quarter to February. When does the quarter start, people? The quarter starts in December 2017 till February 2018. So 3 months there. So 168 divided by 3, what do you get? Let's take the calculator on screen. 168 divided by 3, 56. This 56, here is that. 56 is what? Unpaid until the year end. Until the year end 2017. Because it is paid when? In 2018, isn't it? Or it was received and paid could be later on. It was not paid until 2017. That's why 56 is due. So far, so good. Let's read what is the requirement. The first one, requirement, calculate the electricity expense for the year end. You know, the electricity expense is all of these figures, 96, 120, 104, 145, and what else? This 56 that relates to 2017. That's why that's an expense for 2017. But that's accrued. That's question number B, basically. Calculate the accrued expense for the year end. Accrued expense is 56. That's what we found it. And how much is the total expense should be taken into account? 96 pound, all pound, 120, 104, 145. All these we paid already, doesn't it? Paid by bank. But this 56 is not paid, although it's due, but you should take into account as your expense. That is all about accruals concept. That's what we started with, the concept at the beginning of the of this video. Yeah. Okay. Now let's count it, add it. In fact, yeah. 56 plus 96 plus 120 plus 104 plus 145 equals to 521. 521, that should be my answer here. 521 is the answer. Let's quickly go to the next one. Show how the above transactions would be recorded in the ledger accounts for the electricity expense. So there is an electricity expense account. It's a debit account, and the accrued expense is a current liability. That's your accrued expense account. And what else? Show clearly the balance to the carried down transfer to the statement of profit and loss. There is a bank account as well. They didn't say in the C, but there is a bank account as well. Okay, let's start with the electricity expense account, all debit. And we know electricity we paid here 96, 120, 104, 145. All of these going to be debit, electricity debit. 96, 120. I'm doing one by one. 96, 120. What do you write in the detail? Bank, don't you? Yeah, bank. All of you got to write. Electricity expense debit, bank account going to be credit. So then 104, 145. 104, 145. Bank. Yes. And if you add up, what else is left here? What do you add? You need to add the accrued, the due, which is 56, should be added. That's the rule. If there is a due, you add in SPL. If it's a prepaid, when you're going to learn prepaid, you deduct. But for the time being, just remember add. So that 56 should be added into the SPL. And the name is accrued expense. A big list should be here. Accrued expense taken, bank taken. If we do total, we already know it's 521. 521, all of it, 521, all of it transferred to SPL. Yeah, statement of profit and loss. That's the one. So write it down. P&L, profit and loss account. Now into the bank, what do you write? You write the opposite, because electricity debit, bank credit, 96, 120, 104, 145. They didn't give us any space for balance CDBD, and you write electricity. I'm doing dot. You don't do it. You need to choose. Yeah, just being a little faster. It's already 22 minutes plus. Yeah, it's a long and lengthy. That's why. Accrued expense, SOFP, it's a current liability. CL, current liability. So 56 is our accrued expense, which is electricity basically. Yeah, electricity expenses. And that's the total should be 56, both sides. Here as well, 56, nothing to take here. All of it becomes your what? Balance CD. So you have taken the accrued expense, you have taken balance CD, bank, electricity, and that's a P&L. Yeah, that's it. If you meant to do a balance BD, which you don't need to do for your assessment, you have to do like this way here. Balance BD 56. That's called reversal, you know, which you're going to do in some later videos. Okay, I think there is one more quick activity number 2. Refer back to the your solution in activity 1, means whatever you've done in activity number 1. Requirement is enter the journal entry required for the year-end accrual. You see, year-end accrual, which is basically the 56. Include a narrative. Haha, this time a narrative being required. So 56 is a current liability. It's a credit. 56 and 56 both side is a accrued expense is credit, and electricity debit. So I'd write here accrued EXP credit and electricity debit. So this is the one here, and this is the one you choose and get full marks. Oh, sorry. Hold on for the narrative. Being what is happening? It's an accruals being taken place. So in the pick list for narrative, what do you pick? An adjustment for to accrue electricity expense for the year. Yeah, that should be. But let's read the other one. Adjustment record the electricity prepayment. No, it's not the prepayment. So this is what you choose. Super duper well done. Stay tuned for the next video, which is based on reversal of accrued expenses. Reversal means the closing accruals becomes opening. You know, this particular one, the closing 56 becomes opening. It goes on the other side, on the credit side of your account, and we need to remove into the next account, where I would teach you a little bit of Papa Allah for that one. Okay, then thanks for being with this long video with me, and stay tuned. Check out the next video. Goodbye.